So in the money and out of the money binary options, what are they, and a couple ways to use them. So once again, my name is John Skelton. I'm with apexinvesting.com. Welcome to the Nadex Application and Strategy webinar series. Let's go ahead and get our disclosures knocked out so we can jump into tonight's subject. Trading futures, options, or any financial instrument involves risk, may not be suitable for every investor. The information here in this webinar is for educational and informational purposes only, and is not an offer or a solicitation of an offer to buy or sell any particular financial instrument offered by Nadex. And as always, past performance is not indicative of future results. If you're brand new to Nadex and joining us for one of the first times here, make sure that you do hop on over to nadex.com and you go through the tabs here and you get some information about what Nadex offers. Nadex basically offers two different types of products. They offer binary options and they offer spreads. Tonight we're going to be talking about binary options, and you can go through here and go through these tabs, get some good information about binaries and some of the basics. You know, in these webinars, you know, we cycle back through every so often and we start over with the basics of, you know, binaries 101, spreads 101, you know, what is a binary, how do they work, how do I trade them, how do I pick the right one. Tonight we're going to talk a little bit about that, picking the right one. So if you are brand new and you're not even really totally clear on exactly what a binary is and how it works, some of the things we covered tonight might be slightly a little over your head, but will still be very helpful for you because I think it'll make some sense. But you can go on to the website here and get some information about some of the basics. You can also go back through and watch some of the webinar from the previous webinars, and you can watch some of the webinars we've done for, you know, for newbies and for binaries 101 and kind of start from the beginning there if you go through the webinar archives to kind of catch back up. We're not going to really have time tonight to go back through some of those basics. So if some of this stuff is over your head, just try to keep up as much as you can and make sure to go back through and check out some of those basics videos. Also very, very important here, and you're going to see me reference this tonight several times, right here under trading platforms. You can go to demo trading platform and it'll take you just a couple minutes. You fill out this quick form here and Nadex will give you a free demo account with $25,000 of demo money for you to play with. And you just simply select a username, fill out your info and hit open. They'll send you an email with a temporary password. You can log in and change that password to whatever you would like. Once you have gone into the demo platform here, you can go up into my account and you can go right here to settings and you can go to password and you can change your password. So they'll send you a temporary one. You can change it to whatever you want. That way you can easily remember it. And you'll have access to the Nadex demo platform. All right. And it's absolutely free to use. You do not Note, you do not have to have a live account with Nadex in order to get a demo account. You can sign up right now and get a demo account absolutely free. That way you can get familiar with the platform, get familiar with Nadex, get familiar with the different options they offer as far as the different binaries and spreads, the instrument, entering and exiting orders, how to place orders, practice any strategies or systems you might have or some that you might learn tonight. Great place to get started with and learn about Nadex, about binary options, and testing your strategies with demo money as opposed to live money. So definitely check that out. Like I said, my name is John Skelton. I'm with Apex Investing. I don't work for Nadex. Apex and Nadex, completely separate companies. Nadex is an exchange. Apex, we're an online company. We're an education company. We're a group of traders helping traders. We have over 20,000 members here at Apex. We focus a lot on, we have different strategies, different systems, trading systems. We have a trade room. We focus a lot on risk management and probability. We're going to talk a little bit about that tonight as well. We're a Nadex education partner. Like I said, we conduct these webinars for Nadex each and every Monday night at 7 p.m. Just teaching you how, you know, Nadex binaries and spreads work, different ways to trade them, and how to take advantage of the cap risk products that Nadex offers. I've been with Apex for about 3 years now as head of operations. I've got a banking background. I was a licensed stockbroker with Solomon Smith Barney, so I've got about 15 years of experience in finance and trading, and I'm an educator. I do a lot of trading training and step-by-step training courses over on Apex. But I'm a trader just like you. I trade Nadex binaries and spreads almost on a daily basis. So it's kind of more just sharing with you what we do and how we take advantage of the Nadex products, just to help educate you with those and give you a few ideas that you can implement yourself. Okay, so tonight's topic. If you're new to the world of options or binary options, you may not know what these mean, but OTM, ATM, and ITM. What is that? Well, OTM means out of the money, ATM means at the money, and ITM is in the money. And again, for some of you that are brand new, some of the stuff we covered tonight may be a little over your head. For those of you that have been around for a while, some of this may be elementary to you. Hey, I know what out of the money and at the money binaries are. Well, again, some of us are new, some of us were new at some point, and so we'll just kind of have to all bear with us here. For those of you that are new and those of you that are veterans with us, like I said, some of this may be elementary and some of this may be over your head, but just kind of bear with us here. It's always really good to make sure that you understand how binaries work, not just how they work, but picking the right binaries. You heard me say before, I've talked to so many people that say, man, I have this great trading system. It seems that I have a good system that seems to follow the markets and really predict the direction of the market. But I don't seem to be winning with binaries. And why is that? Well, it could be several things, but most of the time it's going to be because you're not choosing the right binary. Okay? So it's very, very important that you understand picking the right binaries. That's what we're going to talk about tonight. And if you have questions on what we're covering, feel free. If I don't get to your questions right away, it's not that I'm avoiding your questions. I might be answering in the next section here. Otherwise, I'll come back to it. I'm just trying to keep us on time here, and I can try to stay afterwards to answer a couple questions as well. David, I won't quite be able to jump into at the money and out of the money spreads tonight just because of time, but here at the end I can direct you where you can go to the Apex site to get a really good explanation of that. There's a training course and there's a particular video, and I could send you that over there to you as well. Jared, yes I do at times. So I trade a little of both. Personally, David, I probably trade a few more spreads than I do binaries, but I do trade both of those. So, like I said, we're not going to be able to jump into the basics tonight, but we're going to kind of just review what are they. We're going to start with at the money binaries. You're going to have to start in the middle here. Okay. Now, have any of you, especially those that are new, have you ever pulled up the Apex platform here? Let's just, for tonight, let's just choose forex binaries. All right, so those are all open right now and kind of moving. Let's choose euro dollar, and let's look at what we have here. These binaries open up at 6 o'clock and they expire at 8 o'clock. So if you ever open up this right here and you say, okay, man, all these different ones right here, all these different strike prices, these are all different binaries. Look at that. I have a ton of binaries to choose from. How do I know to pick the right one? There's so many to choose from, right? And this goes back to what I said. Some people say, man, I think I have this great system. Seems to catch the moves. You know, my system tells me the market's going up, and the market does go up, but I'm losing with my binaries. Well, which one of these are you choosing? There's so many to choose from, right? You can see there's all these different strike prices. Over here on the offer side, here's the price you can buy for. The bid side, here's the price you can sell for. Now, some of these don't have a bid and some of these don't have an offer because they're so far away from the market. That's what we call out of the money. We'll talk about that in here in just a second. But right now we're talking about at the money. Notice over here the indicative price. This is the current indicative price for this market. What is the indicative at? 1.1012, right? So the market's at 1012. Well, look, we've got strikes from 1072 all the way down to 0968, right? There's a bunch of strikes. But notice this strike right here. What is this strike at? 1.1012, which is what? Exactly where the market is right now, right? So notice you could buy it for 56 or sell it for 47, right close to about what? An average of around 50 bucks, right? About 50 bucks. So when there's a strike price that's real close to the current underlying price or indicative price, that binary is going to be priced approximately around 50 bucks. Now, those are the ones that are expiring at 8 o'clock. Let's look at the ones that expire around 9 o'clock. Well, indicatives at what? 1012. Well, there's not a strike price of 1012, but there's one at 1010 and 1014. So right in between those two, where's our average? Around 50 bucks, right? About 50 bucks. Okay. What about some that are expiring tomorrow, like at 3 in the afternoon, let's say? Well, again, the market's at 1012. So we've got here 1.1000 and 1.1020. So 1012 is kind of right in the middle between those two, right? See the price of those two strikes? Would it be right in the middle? It's all around 50 bucks. So not just at 8 o'clock, but also at 9 o'clock, even tomorrow afternoon at 3 o'clock. How about weekly? Today is Monday. What about the ones that expire on Friday? What's the closest here to 1012? Right in here, right? See, around 50 bucks. So let's go back to the basics of a binary. At expiration, when a binary expires, it either wins or loses, right? It's either yes or no. It's either worth what? At expiration, a binary can be worth what? One or two things. What can a binary be worth at expiration? Either 0 or 100, correct? So what's right in the middle between 0 and 100? Well, 50 bucks, right? So from now to expiration, we might not know, right? If the market was at 1012 and the strike's at 1012, well, right now it's kind of right there in the middle. It's a 50-50 chance, right? Is the market going to expire just above 1012 and therefore that binary is worth 100? Or is it going to expire just below 1012 and it's worth 0? We don't know, right? It's kind of straddling the fence. It's about a 50-50 chance. It's about a 50-50 probability. Therefore, it's priced around what? Around 50 bucks. All right, so does that make sense? Does everybody understand that right there? And it doesn't matter how long you have to expiration necessarily. I showed you 8 o'clock expiration, 9 o'clock expiration, tomorrow afternoon, and even weekly. So what do we know that when a strike is right around the same as the current underlying, we know that binary will be worth what? Around 50 bucks, right? That's very important to know that. So now that you get that, it's not quite as confusing when you look at this anymore, is it? Because you look at this and your eyes go right now to, boom, around the $50 area, right? So you realize, okay, 1012. Then you realize that all these strikes above it are what? They're above the market, right? The market's right here at 1014 now. Well, this next one's 1016. So all of these strikes are way above the market, correct? Meaning what? Well, if we looked at that on a chart, the market is right here at 1015. All those other strike prices are way up here, right? Meaning if you're going to buy one of these way up here, what are you saying the market has to do? You're saying the market has to go way up there for those to expire in the money, correct? Because when you buy a strike price, when you buy a binary, you're saying the market will be greater than that, correct? So right now the market's right here. If you bought a binary way up here, you're saying the market has to go way up there. So when you're looking back here at the different strikes, that makes a little more sense, right? You can almost look at this as a chart in a sense of, okay, if I'm looking at a chart, right here is where the market is. It's where the price is right now, around the $50 level. All these strikes above it are way up there, like me saying the market has to go way up here, right? All these strikes down here, where are they at? Well, if we look on a chart, they're down here. If I'm buying one of these strikes, and I'm buying it saying the market will expire above it, well, the market's already above it, isn't it? If I was to buy a strike, let's look. Let's look at this strike right here. See, it's priced at 82 bucks. It's 1008, right? So if I'm going to buy it, so I want to buy the strike of 1008, I'm going to buy this strike right here. So I'm buying the strike saying what? Saying the market will expire at 8 o'clock. It'll expire greater than this. Well, it's already greater than this, right? So if I'm buying it, as long as the market stays above it, I still win, correct? Now you could sell, Eric, yeah, you could sell, but I'm just talking about the buy side. You could sell. Sure, you could sell one of these strikes saying the market will go down. But if we're just talking about buying, for example, so I'm buying this one here, just saying the market has to be greater. So does that help just right there when you look at this, as opposed to, oh my goodness, there's so many of these, well, this is so confusing. Well, if you know what at the money is, meaning right at the market is around 50, boom, it kind of in your mind splits this in half, doesn't it? Here's the market now. So these above it mean the market have to go up to them. These below it mean the market's already above them. Okay, so why do you, but let's look at these that are above it, these higher strikes. See, we've got 60, 40, 29, 16, 9, 8, 5. These are a lot cheaper binaries up here, right? So why do you think if the binary that's in the middle, okay, the binary that's in the middle, meaning the market, the indicative price, is right around the same as the strike price. So it's priced around 50 because it's about a 50-50 chance, it's about a 50% probability. Well, when the prices are cheaper, what do you think that also means as far as probability? These less expensive or lower priced binaries are probably a less probability, correct? They're lower risk, but they're less probable. And why is that? Well, because if I'm going to buy this binary right here, and I only want to put 14, 15 bucks, what's the strike price? 10.24, right? So I'm saying 10.24, I'm buying this one up here, saying, if I'm buying it, what am I saying? I'm saying the market will expire above it. So remember I said earlier, some of you guys say, hey, I have this great system, but my binaries aren't winning. Well, did you buy this one up here because you only wanted to risk $15? And you were right, the market did go up. You're like, well, the market was at 10.15 and my strategy said the market's going to go up. And it did. The market went up. But I keep losing on my binaries. I hate binaries. They don't work. Because the market was at 10.15 and then it went up to 10.16 and 10.17 and 10.18 and 10.19 and 10.20 and I'm watching the market go up. I'm getting excited. My system's right. It goes up to 10.20, 10.21, 10.22 and then 8 o'clock comes around and the binary expired. And my binary is worth 0. I thought when I buy, that means the market's going up. Or I want the market to go up. So I bought it, and I was right. The market went up. But the market didn't go all the way up to your strike, did it? And that's what I hear from a lot of people is, hey, I bought because I thought the market's going up. And the market went up. But my binary didn't make money. Well, because the market may not have gone all the way up to your strike. Or it might not have gone all the way up to your strike by 8 o'clock. Maybe it did go up to your strike and keep going by 9 o'clock or by 10 o'clock, which again is why, notice, there's a lot of different options here. 8, 9, 11 p.m. You have different binaries to be able to have more time to be right. So part of the reason that these binaries are priced lower is because there's a lower probability of the market going up. Now, I'm not telling you these are bad. I'm not telling you don't use them. I use them all the time. I'm just saying, if you're going to buy a binary up here, and even though you're only going to risk about 15, 20 bucks, Why would you ever want to buy a binary up here? Just because? Just because it's only 15 bucks, we might as well. There's only one way that this binary can expire in the money and win at expiration. And what way is that? That the market goes up. And the market goes up past it, right? The market come up just a little bit, the market can stay where it's at. The market can come up a little bit, it loses at expiration. The market can stay where it's at, it loses at expiration. The market can come down, it loses at expiration. The only way one of these binaries wins at expiration is for the market to go all the way up to it and expire above the strike, right? At expiration is kind of one option. So the only reason you'd ever want to buy one of those is because your strategy or system, whatever it is you're trading on your chart, whatever indicators and strategy you're using, is telling you that the market's going up, right? That's the only reason you'd want one of those, is because the market is going up. Now I'm talking about at expiration. Yes, you can scalp and you can get out of them early, but I'm talking about at expiration. So the only reason to ever use one of those those lower price binaries is if you think the market's going to go up there and it's going to move up there and it's going to move up there before expiration, or move up there enough before expiration to get a scalp out of it. So does everybody understand why those are priced a little lower compared to something that was priced at 50 bucks? Does that make sense? Any questions on that in and of itself? Just before we move on. Troy, can you change your price before expiration? You can't change your strike, but you can buy another one or sell another one. You can get into as many as you want. You can get out of one and get into another. You can't just change it in the middle of it. You'd have to exit the one you're in and get into a different one. Okay? So Eric says, so the price is somewhat correlative to the percentage probability. Yes, Eric, you can look at it that way. What you do is take the mid price. What do I mean by that? Now, this is not taking into account a chart, a strategy, a system, the current direction of the market. It's just taking into account the way that the binary option is priced, okay? Can show you a probability of it expiring the money just on price. And what it is called the mid price. So 34 and 43, what's the middle of that? About what, 39? So just from a price standpoint, it's about a 39% probability. 38.5, Eric, there you go. So yes, and so you look at it as the mid price. Okay, just like we looked at those $50 ones, like you could sell it for 46 or buy it for 54. The middle is about 50. Okay. Let's see here. Jared, at the money trades, it's usually a 10-tick move to make money. I usually start in negative, have to move. No, Jared, absolutely. Ticks has nothing at all to do with binaries. Okay. It might be a 0-tick move if it's coming closer to expiration. Binaries are not priced with ticks. It's a simple yes or no. Is it above this particular price at expiration? Okay, I could buy this right here. Let's see here. The market's at 10.18. I could buy this 10.16 right here for 66 bucks. The market could go flat and not move one tick at all, and that would still expire worth $100 at expiration. Okay, so so everybody understand the probability of that. Now, so we understand $50. We understand these that are priced less than $50. Let's move to 9 o'clock here just to have more options here. So what about these that are priced higher than $50? What about this one right here that's priced at $77.50? It's priced a little higher. It's got a little higher midpoint, which means it's a higher probability. Why is it a higher probability? Well, what's the strike? Strike is 10.10. So let's look at that here. Okay, let me just clear these off real quick here. So 10.10 right here. Okay, it's priced at 77 bucks. Why is it priced so high? Well, these are what we call in the money binaries. It's already in the money. If I buy this strike for 10.10, what am I saying? What is the statement? What is the binary contract itself? Well, the binary contract statement is saying, I'm buying this because I believe the market will expire above 10.10 by 9 p.m. It's already above 10.10. It's at 10.18. No, Troy, I'm not saying that the market will drop. I'm buying it. If I'm buying it, I'm saying that the market will stay above 10.10 at expiration. Okay? So it's already above it. So it's already in the money. So that's why it's priced a little higher, right? Because it's a higher probability that it will expire in the money because it's already in the money. So if I buy this one and the market goes up, and at 9 p.m. the market has gone up, do I win or lose? Win. If I buy this one and the market just goes flat dead, doesn't do a thing, stays right where it is at 10:17, stays right where it is until 9 o'clock expiration, do I win or lose? Still win. What if between now and 9 p.m. the market comes down to 10:11 and expires? Do I win still or do I lose? I still win because all that has to happen is it has to stay above 10.10. It doesn't matter if it stays up here, goes way up here, or comes all the way down to 10.11. At expiration, as long as it's above 10.10, then I win, right? Now look. See, when I open this ticket, all right, all I'm buying here is I'm saying that the euro dollar will be greater than 1.100 at 9 p.m. Notice the indicative, 1.10179. See how there's an extra number here? So all I need this to be is greater than 10100. So if it's 10101, I'm good, right? Because 10100 is not greater than 1010. Okay? So I have a lot more options now, don't I? Because remember, if I bought one of these ones way up here, what's my only option of it expiring in the money? Expiring, not scalping, we're not talking about that. Expiring. There's only, if I buy one of these way up here, I only have one option for it to expire in the money, and that means the market has to move, it has to move up, it has to move up higher than this, and it has to move up higher than this by 9 o'clock. Like, that's my only option. Buying one of this one down here, I have several options. The market can go up, the market can stay flat, and the market can come down, as long as it doesn't come all the way down. Right? So it's a much higher probability in and of itself, correct? Therefore, if right here where the market's at now is $50, keep in mind, at expiration, a binary is worth what? 0 or 100, right? So right here in the middle is at 50. Going up in these strikes, we're working our way down to what? 0. Going down this way in the strikes, we're working ourselves up to what? 100. It's right here in front of you on this price ladder, right? 50, and then they're working their way up closer to being worth 100 because they're getting deeper and deeper in the money. Okay? Ron, are you saying when it expires at the strike you will win? As long as it expires 0.1 above the strike, Ron, like we just covered here. See right here on like 110? What are we saying here? That the euro dollar be greater than 1.100 0.1010. Well, see the Nadex indicative? It's 0.10184. Notice right here, notice after the decimal here. After the decimal, there's 4 numbers. But after the indicative decimal, there's 5 numbers. So as long as that last one is above 0. So if it expires at 10100, then no, I do not win. But if it expires at 10101, then yes. Because why? Because it's greater than what's listed here. Okay? Does that make sense, Ron? It's all about that. When it comes right down to it, it's all about that last one. Okay? Let's see here. Jared would show you positive on your account. It would go down from there if it went against you. How much would you win? I'm not really understanding your question there, Jared. If I was to buy a binary for, right here, if I was to buy this one right here, I'm just going to buy one of them. Right now it's priced at 77 bucks. I would make $22. I would make the difference of where I bought it compared to $100 at expiration. Okay? Yes, even if it just hits one above. It's not about, I'm not sure where you're getting in about how much, and it's a simple yes or no statement. This statement says the euro dollar will be greater than 1.1010. Yes or no. If you think it will be, you buy it. If you think it won't be, you sell it. That's it. And if it expires above that, it expires being worth 100 bucks. If it expires below it, it's worth 0 at expiration. Okay? If you bought it. Okay? If you bought it. If you sold it, you're saying it'll expire below that. Okay? So, does that make sense now? When you look at this on a chart as well, when you realize 50's in the middle, and those lower price ones are up here, and the higher price ones are down here, and as to why. Okay? Eric, maybe you're getting to that. It seems like it should be a push and a return of the trade amount. Eric, I really don't understand what you're asking. At Nadex, at exactly like the money on a buy, it's a loser. Because it didn't expire above it. You don't understand. I don't think you quite understand how binaries work, Jared. A binary is a statement. And the statement is the euro dollar will expire greater than this. So if it expires at that, it didn't expire greater. Right? So the statement was false. It was a lose. It lost. If I say, yes, I'm going to buy this because the euro dollar will expire greater than 1010. And it didn't expire greater than 1010. Then the statement's false. It lost. Okay? It's as simple as that. It's a yes or no. Yeah, that's all. That's what a binary is. It's a simple yes or no statement. Okay? So, if I'm selling it though, I'm saying it'll expire at 1010 or less. So if I'm selling it and it expires right at 1010, then it's a winner. If I'm buying it and it expires at 1010, it's a loser. Because it's all greater than 1010, or selling it would be 1010 or less. Okay? So, all right. So that in a nutshell is in the money, out of the money, and at the money binaries. Does that all make a little more sense now as far as what you're looking at when you're looking at all these different strikes here? Does that make it seem maybe a little less intimidating and maybe not as hard to realize which one you want? Because you know what's right in the middle, you know what's up here and has to move, and what's down here and already there. Does that make a little more sense? Okay, let's see here. I'm just looking over these questions here real quick. Oh, dollar amount, because I was used to just win 100, lose 100. In this, I win 22, not 100. It's just a little, right, Jared. Yep, it's different. It's all a difference between 0 and 100. Vita, how do you place a binary sell to make maximum profit? If you place it at the money, you're only looking to make no more than 50, 40 pip. How do I place for maximum risk and maximum profit? Do I use support? Not quite sure of your question there, Vita, but I mean, that's what we just went through there with the different options. I mean, if you're trying to use one of these real out-of-the-money binaries here to make more than 1-to-1, you have to have a strategy or system that's letting you know the market's going to move that far in time. So that really depends on the strategy or system that you're using there. We don't really have time to go into all the different strategies and systems here tonight. I can kind of point you and direct you to some different ones there. Let's see here. Matthew, I'm using NinjaTrader. Philip, when is a good idea to take when is a good idea to take your losses or cut your losses? I'm actually going to talk about that a little bit, Philip. Let's talk about it right now. Let's put something into perspective here. But before I do, any other questions regarding in the money, at the money, and out of the money? Just what we covered right here, this actual price ladder and why they're priced the way they're priced. Does that make sense? Okay, so, and does everybody understand that the market's right here, and if I'm going to go buy something up here for like 10 bucks, it's a pretty long shot that the market's going to go up there unless I have something telling me it's going to go up there. Okay? Yes, Walter, it's being recorded. So, show of hands, be honest. How many of you are guilty of going, I want to trade binaries. I think the market's going up. Which one should I buy? Ooh, $72. Meaning, if I buy this and I'm wrong, I'm going to lose $72 at expiration. I don't like that. I'll risk 11 bucks. I mean, if I lose, it's only 11 bucks. Why not? Let's do that one. Show of hands, be honest. How many of you in the past have determined which binary you're going to pick, have picked your binary solely due to price? Or you open a ticket and you're like, yeah, maybe I can, yeah, let's buy this one right here. So my max loss is 60, my max profit 40. Ooh, I don't like that. I don't like that. So let's see here. If I buy this one for $11, oh, I can only lose 11 bucks. And look, max profit. I can make $88, risking 11 bucks. Let's do it. Placing that order. Done. I like that. I'm going to risk 11 and I can make 88. I love it. Right? And what strike did you buy? 1034. Way up here. And then you wonder why it didn't win at expiration, because you chose that binary simply based on the risk. Right? We've all done it. Now, I'm not saying don't ever do it. I do it all the time, and I'll show you why here in a little bit. But then you wonder why it didn't work out. It's because you're not choosing a binary based on a strategy or system. You're doing it based on emotion, based on the price, because you don't like risking so much here. Correct? Okay. So let's talk about something here. So that one that I just bought at 1034, we talked about the mid price earlier. I can buy it for 11. I can sell it for about 3. What's the mid price there? Say about 8 bucks, right? So what's the probability of that binary winning at expiration? 8%. Which means you're going to win less than what? You might win what? 1 out of 10 trades? Do that math real quick. That means you're going to lose 9 trades. We bought it for 11 bucks. 9 times 11 is what? Or yeah, more like 1 in 12 trades, right? If all you did was trade those all day because you like that low price and you like, here's what you like that number right there. Oh, I can win 89 bucks. If you won 89 bucks one time and then you lost 10 bucks 11 times, are you profitable or are you losing? Does the math work out? No, it doesn't, does it? Just based on probability alone, it doesn't work out. You're choosing that one based off emotion because you like it, because you like how it feels and looks. Yeah, you're down about 21 bucks. Perfect, Eric. Thank you. But it feels good, right? It feels good and it feels safe to see you only could lose 10 bucks and maybe win 89. Or like someone asked earlier, how do I get the max I can? The numbers don't work, do they? 8% probability is not necessarily something we want to make a strategy out of, right? Now, what about this one? Where's my midpoint? About 67 bucks. Do I prefer a trading strategy to a binary that has an 8% probability of winning, or do I like a 67% probability of winning? Just in general, not talking about risk or dollars, I'm talking about probability. All of us are going to prefer the 68. We know this, right? Always. So if I were to buy this one, ouch, what do I not like there? What scares me? That number right there, max loss of 71 bucks, right? I don't like that. What I like is, ooh, look at this one. I like this one. I can risk 20 bucks and maybe I can make 80. All right, I prefer that one. Let me just go with that one. Right, because I'll risk 20, but what's my midpoint here? Still like a 16%. So I've got to, so because I'm basing this off emotion, I would rather take a 16% trade, 16% probability trade, and only risk 20 bucks, right? Because I don't want to take a 75% trade to risk 80 bucks. And that's where the problem comes in, correct? Everybody agree? That's where we get hung up between which binary we choose. Because do we go for probability or do we go for lower risk? So let's think about something here. I can go with one of these binaries down here and I can risk 20 bucks or I can risk 29 bucks, right? Okay, so 20 to 29 bucks, okay. But what if I took this one right here at 1006? Okay, Jim, I'm looking at the midpoint between the bid price and the offer price. Okay, the mid price in there is about 75 bucks, so about 75%. Okay, we figure probability based on the mid price. Mid price is average between the two. That makes sense, Jim? Okay, so what's that strike? 1006. So I could either take one of these up here, low probability, and risk 20 or 30 bucks, right? At 1022 and 1026, okay? This is where it's all going to come together for you, so pay real close attention here. This is where it's going to all fit together real quick. So I can spend 20 or 30 bucks and get a 22 or 26 strike, right? So where is that on the chart? Let's mark it. So up here at like 22, whoop, or 26. Okay? So if I buy either one of those, risking 20 or 30 bucks, I'm saying the market has to go up there. My other option was this 1006, or let's just look at this one. Let's look at 1010. Okay? 1010. All right? So I can buy it for 71 bucks. Where's the 1010 strike? Down here. So which one of these do I like better as far as the low dollar amount of risk? I like this better because I'm only risking 20 bucks, right? We all agree? We like this strike up here because we're only risking 20 bucks. So from a risk amount standpoint, we like this one, we're risking 20. Because this one we're risking 70. So we prefer to only risk 20. We all agree with that, right? That's an elementary, almost dumb question. We all agree with that, correct? So which one do we, but this one up here, we only have one option. The market has to move all the way up there, right? This one has like a 15% probability of winning. This one has like a 65% probability. So which one do we like better as far as probability? Right, because when we're coming up with a trading strategy, we always like the one that has a higher probability. And what else do we like about this one? The market can move up, still win. The market can stay flat, still win. The market come down to 10, 10, 1, I still win because it's already in the money. We have a lot more options here. We have, the market can go 3 different ways, we can still win. Higher probability, we can still win. We like that we only risk 20 right here. Somebody asked earlier, how do I know when I should just take a loss and exit early? Because with Nadex, at expiration, they're worth 0 or 100. But between now and expiration, the prices will fluctuate, correct? So you can get out early. So what would possibly be a good strategy? Well, what if I told you this? What if I said, hey, up here, we risked how much? Can anybody remember? How much do we risk on this binary? Anybody remember? 20 bucks? Correct? But we liked this because it was much higher probability. And again, I'm repeating myself a lot here because I want you to get it. What I liked about this is the market goes up, I win. Now, what would be the only reason I would buy this, any binary? Only reason I would buy is because I think the market's going to stay where it is or go up, correct? That's why I'm buying. So if I buy this binary down here, I'm only buying it because my strategy or system, my charts, my indicator is saying the market's going up, correct? But instead of buying up here, I'm buying a little below it to give myself some room, right? Everybody follow me? So I only bought this because I think the market's going up or going to stay up. So if the market goes up, I still win. If the market just kind of stays flat, I still win. If the market came down and came all the way to my strike price that I bought, because remember I bought kind of low here, right? To give myself some room, correct? But if the market actually came all the way down to my strike, what might I be telling myself? Hey buddy, maybe you're wrong. Maybe the market's not going up, right? Does that make sense? I mean, if the market's up here, like I want y'all to get this, if the market's up here and my chart and strategy are saying it's going to go up, but it actually comes, so I buy lower to give myself some breathing room, and the market actually comes down to that breathing room, there's a possible good chance that I'm wrong, correct? Maybe? Everybody follow me? So, if I bought this right here for how much? 70 bucks, right? Everybody remember? Bought it for 70 bucks. So if the market comes down, not at expiration, but between now and expiration, if the market comes down all the way right there to my strike, I bought the 1010, the market comes down to 1010. What was the very first thing we covered tonight? When the strike price is right at the current indicative price, what is that binary worth? I showed you an example of an 8 o'clock. I showed you an example of a 9 o'clock. I showed you an example tomorrow. And I showed you an example of Friday. When the strike price is right at the current indicative, that binary is worth $50. Nope, not zero. We're not talking about at expiration. We're talking about an at the money binary. Remember? I showed y'all. Not at expiration, but between expiration. Between now and expiration, when the strike price and the indicative are right around the same, the binary is worth 50. Remember? I showed you like examples, hours out, a day out, and a week out. Everybody remember? So, if I bought below the market, thinking the market was going up, and the price comes down, bam, what is my binary going to be worth approximately? What could I get out at approximately? 50 bucks. So I bought it for how much? 70. Looks like I'm wrong and the market comes all the way down to it. I bought it at 70. I get out around 50. What did I lose approximately? What is my risk? If I had my own strategy or system that says, okay, if I think the market's going up, I'm going to buy below the market to give myself room. And if the market comes down, and if I'm wrong, the market comes down and it hits my strike, bam, I'm going to exit. I'm going to exit that binary if it hits my strike. And that's going to be my system. That's going to be where I get out. Does that make sense? Sound like a halfway decent strategy? Because if the market's already right here, and I think it's going up, but instead it comes all the way down here, I could be wrong. So if I held true to that strategy, and I bought around 70, I got out at 50, if I always held true to that, how much money am I really risking on every trade? Am I risking 70? Or am I really risking 20? If I hold true to that and be disciplined to get out, I'm risking 20 bucks. Does that make sense? Does everybody follow that? Like, just let's focus on that for a minute. Does everybody understand what I just covered right there? That I'd be risking 20 bucks. How much did I risk on this low probability, 15% probability trade way up here? The same thing, only 20 bucks, right? Remember? Remember we talked about that. Hey, and I said, remember earlier, I said, hey, show of hands, how many of you just ever always choose these up here because they're low price, $17, $26. Oh, I'll take that. I like that. But remember how we talked about that may not be, that's not the highest probability, is it? These are the ones with the 60 and 70 or 80% probabilities, right? But you don't like those because of the what? The high risk. So what I just taught you right there, within the money and out of the money, is how can you go ahead and take a higher probability trade to put probability in your favor, put percentages in your favor, give yourself more room, give yourself an option for the market to go up, flat, or even down a little and still be okay, but create an exit point for yourself where if it comes all the way down, you get out. So you got these 65 to 75% probability trades, and yes, it ties up a little more money when you first get in the trade, but if you exit it when it hits the strike around 50, you take advantage of the high probability of the percentage, but you still only have to risk that low dollar amount like these cheaper ones up here. Does that make sense? Is that kind of a light bulb of, got it? Does that kind of make sense there? How you can kind of combine those two to where you don't have to feel like, well, I've got a smaller account. I can't afford an $80 binary. I can only afford this $25 one. Well, if you buy this $85 one and it goes against you and you exit it at 50, it's about the same risk, but you got in a much higher probability trade. Okay? Does that make sense there? Let me check a couple of these questions here. So, like I said earlier, I hear a lot of people say, man, I think I have a good strategy because the strategy told me the market's going up. The market was at 10.13, and then 14, and then 15, and 16, and 17, and 19, and 20. Great, great. Then it expires, but it didn't get all the way up there. My binary loses. My binaries keep losing. These cheap ones I buy are up there. The market goes up towards it, but not quite all the way. Would this one have won? Yes. Okay. Now, there are plenty of times to use these binaries. Okay. Because as the market's coming up closer to it, it could be going up in value. We might have bought it at 20 bucks, but as the market's coming closer to it, then it's worth 25 and 30 and 40, and you can get out of it early. You can scalp it. I'll kind of direct you where you can watch some videos on how we do that. Okay. I'm not saying you should only do it in the monies. I do both. It's just if you're trading directionally, okay, if you have a directional trend trading system, you can trade these out of the monies, but you better make sure that your strategy or system you're using to let you know that the market's going to move and it's going to move that much, but it's also going to be that it moves that much in time, in enough time, meaning, hey, my strategy or system is telling me that the market's going up, but I use a little longer term system. It might take a while to get there. Well, then maybe I don't. It's 8 o'clock now. Maybe I don't want a 9 o'clock expiration. Maybe I want an 11 o'clock or a 3 a.m. I want to give it time to get there. Okay, that's one of the worst things, or not one of the worst things, but that's one of the things I hear a lot of is, man, my strategy was right. It went up. It just didn't go up enough in time. Like if I'd had an extra hour, it would have gotten up there. All right, so possibly you need to give yourself a little more time. But I just also wanted to show you here how to take advantage of higher probability trades, but still keep your risk in line, okay? Now, there's a couple other type of trades that we do with these in-the-money binaries, and they are called butterflies, where we actually buy a binary down here, and we sell an in-the-money binary up here, saying that the market would expire somewhere in between. We kind of create a box. And as long as the market expires in between, we can make money on both sides. I'll show you where you can watch a video on that. We do have some other strategies we use called a Strangle, where we're buying and selling the cheap out of the monies for like 20 bucks when the markets are real volatile and they're like going crazy like we've seen recently, right? Okay, like when there's real crazy markets, we're not sure exactly where it's going. We just know it's going up and down. So maybe we risk 15 up here and risk 15 down here and let it pop way up there and make 30 or 40 bucks on one side. Okay, I'll show you where you get some videos on this. Now that you have an understanding of, we had to start somewhere. We had to lay the groundwork and lay a foundation. Now that you have a good understanding of at the money, out of the money, and in the money binaries, okay, now you can kind of take advantage of and look at some of these other strategies and systems of ways to use them, okay? So, and I'll direct you here in just a second where you can get some more information on that. Let me take a look at some questions here. We're kind of running over our time right now. Let's see here. Okay, let me just look over a few questions here. What if you were selling? Would you sell from above the market? Yeah, Vita, exactly. It would just be the opposite. So if you're selling, maybe you'd sell one up here. Like, for example, the market's at 1016. So maybe you'd want to sell this 1022 right here, risking 23 bucks. That's the same thing as like buying for 70. Risking 25 bucks is the same thing as buying for 75 bucks. Same type of risk. So yeah, you would just sell above it. Same exact concept, just flipped over. Okay? Absolutely, yep. Let's see here. Yep, Philip, yep, you can leave it early. Yeah, Gary, you could set that up as well. Right at the strike. Bobo, can you show people using one of your open contracts? Well, let's see here. I don't know if we have the market. The market hasn't come down to either one of these contracts here, Bobo, but yeah, with either one of these, I mean, I bought it at 1010. If I want to exit out of it, I just have to click it, and it pulls up a ticket marked sell, and I sell it. And oh, hold on, let me clear that out of there. That's in my working orders. I'm right here. If I just want to sell it, I open that up, and I can sell it and get out of it, and that order's gone. Okay. Let's see here. What I mean is, if you take, say, 80% and the market starts moving away. Beta, I'm trying to follow up on your, let's see here. Yeah, you just sell above it, Beta. Like I said, John, I'm not saying always buy in the money. There's different strategies to do that. Just kind of showing you some different ones there. David, will this also cover the premium, or is that at a loss? David, you're normally looking at like, remember I showed you earlier some that were right at the strike, and the sell side was like 46 and the buy side like 54. So when I say exit at 50, you might only get 46, not actually 50. Does that make sense? It might be a few dollars below 50, okay? Because if it's right at the strike, it's going to be like 46 on the sell side, 54 on the buy side. All right, so there may be a few dollars in there, yeah. Okay. Let's see here. Yeah, Philip, I use tick bars. Okay, these are what we call diagnostic bars. Okay, they're kind of apex. These are apex bars here. We call them diagnostic bars. I mean, some systems I use minute bars on, time-based bars. A lot of it we use tick-based bars. Gives a more accurate example of what's going on there. Let's see here. No, you have to exit that manually, Matthew. So, Philip, I'd say early morning at the open of the U.S. Open, like 9:30 to 11:30, say. John, good. I'm glad that, hope that helped out, kind of maybe opened your eyes a little bit there. I know we didn't get real deep into exact strategies and systems of when this indicator does this, you enter, and we'll get to some of those. It's more that you have to really, first of all, understand, hey, wow, have I been picking the wrong binaries all this time? Like, I haven't, like I said, I have a great strategy, great system. It wins with other things, but man, it's not working with binaries. I was probably choosing the wrong one way up there. Gotcha. Wow. Okay. And you didn't choose the other ones because it was so expensive, right, John? That's why you didn't want to use those other ones, because like, I'm not risking that much. I don't want to risk 75 bucks to make 25 bucks. No way. But if you get out at the strike, like if you buy for 75 and you get out at the strike of 50, you're only risking 25, right, John? So what did you just do there? If I, like, get this one last piece here. If I buy for 75 and it expires in the money, what's the most I can make? I buy at 75, it can expire worth 100. So what did I make? 25. If I buy at 25 and it goes against me and I get out at 50, what did I lose? 25. So I'm risking, technically, if I stick to it and be disciplined and exit at the strike, I'm risking 25 to make 25. So I have a what? I have a 1-to-1 risk-reward ratio, correct? So if I have a 1-to-1 risk-reward ratio and I only win half the time, I break even, right? Didn't win, didn't lose, I break even, correct? But if I'm taking advantage of the 70% probability binaries, I'm up 20% in a sense, right? But then I'm not just randomly buying something that's priced at 75. I'm also adding on to that a strategy, a system, my charts, my indicators, giving me direction that the market's going that direction. So I'm not just solely basing off of a price probability and gaining that 20% edge. I'm also adding in reading the market, using a strategy or system that also tells me it's going that way. Does that make sense? You kind of get the power of this now? I'm risking 25 to make 25. I got 1-to-1 risk-reward ratio. So as long as I win 50% of the time, I'm even. So now, I don't want to just be even. How do I pop myself up an extra 20 or 30% in my direction? Well, by taking advantage of those higher probability trades of 70 or 80% and following my strategy or system, all I really need to gain is that difference of 20 to 30% edge to be long-term profitable, right? Don't get stuck. Hey, I'll show you where to get some videos on how to trade some of these lower priced ones, okay? I do it all the time. But don't get stuck in the world of, I'm going to risk $8 to make 92, and I'm going to be the magical person that makes that happen. That's not, you know what? Have a good, solid strategy, system, long-term, rules, high probability, and just slowly build that. Does that make sense? Okay? So definitely take advantage of putting those two pieces together there. So, okay, well, let me just double check any other questions here. I do appreciate everybody staying on with us, being on tonight. I hope this really helped, and I hope this opened your eyes to some of the differences there of the in the money, at the money, and out of the money binaries, and some of the different ways to combine those two, to combine not only the risk side but the probability side, and take great advantage of the capped risk products with